All right, everybody, and we are live, Cryptocopia AMA session number 3, actually, and we're really excited to be here. Thanks for joining us. Today, our guest, our honorary guest, is none other than SoCal Crypto. He bought his first Bitcoin in 2013. He's an Army veteran, and he's both a miner and a trader. So I've got a lot to ask him about. SoCal, thanks for joining us today, man. How's it going?
Yeah, man, I'm doing all right, all things considered. Thanks for having me.
Of course. Yeah. We're happy you could, make the time. So I just wanted to ask you a little bit about your background first. How long have you been involved in crypto, and what sort of first got your attention about the space?
Well, I bought my first bit of Bitcoin in the end of 2013. I actually found out about Bitcoin in 2010. How one of my good friends told me about it while I was home on leave, my 2-week leave while I was deployed to Iraq. So he told me about this internet money that drug dealers were using. I was like, yeah, that's cool. Well, I don't have time to worry about that. I got to go back to war now, So
right.
I kind of just blew it off, and that's when I first heard about it, and I continually kick myself in the ass every day for just blowing it off way back then. But like I said, I finally got into it end of 2013, and I've been in ever since.
Okay. I mean, hey, like 2013, that's still, it's a little earlier than a lot of us. I'm not sure. I can't speak for everybody in the group, but, respect. So what's it been, back then compared to right now? Like I'm honestly kind of curious about how the bear markets compare. 2013, 2014, I've heard was a really brutal bear market, but this one feels pretty rough as it is. How do they compare to each other?
Yeah, well, everything's the same, yet everything's different. The bear market in 2014, 2015 was brutal. It was bad. But I know percentage wise, the pullbacks during both that bear market and this one are almost identical. However, what you have to realize is that, going an 85% pullback from, 1,300 is only like $150, $200. You're a hell of a lot closer to zero than an 85% pullback from $20,000.
Sure.
You know what I mean? Because we're still hovering around $3,500. That's a hell of a lot farther away from zero than $150 is. So it definitely felt more like end times during the deepest depths of that bear market, the 2014 2015 bear market. It did feel pretty apocalyptic. However, crypto was also a lot smaller, a lot closer knit, and in some ways a lot more not as serious. It's just a thing we were all kind of fucking with and having fun with.
Okay. I mean, I guess it still is magic internet money, but it seemed a lot less legit at the time, I would imagine. I mean, what did adoption look like compared to right now?
Oh man, a lot more ground. Yeah, pretty much. It was huge, massive news when it broke that Overstock.com started accepting crypto. And then Tiger Direct and Newegg started accepting crypto. Well, Bitcoin at least. And that was huge, big wins. Everybody celebrated that stuff. Now it's just like, yeah, that's nothing, dude. Look, whatever. Because now we're talking ETFs and mutual funds and all sorts of craziness.
Fidelity.
Yeah.
And it probably wasn't even, a liner note on an SEC report, right?
Oh yeah, not even.
So, all right. So tell me a little bit about your experience, because I understand, you trade, but you mine as well. I'm kind of curious, like, Well, so first, how long have you been mining? You know, if you bought your first coins in, you know, the tail end of 2013, did you get pretty serious into mining right away? Did you hold off for a little bit while you sort of learned more about the coins and how they worked and how they were secured and all that?
Oh yeah, no, mining is actually what I jumped into before trading. So that was one of the big draws for me to crypto is, using your idle computer cycles to, CPU or GPU cycles
Yeah.
to, basically generate money. It's like, oh man, that is freaking sweet. Because I've always been in IT related fields and always loved computers and stuff. Got my first PC when I was freaking, what, 6? So that was like 94. It was a sweet Windows 95 machine. Had like 800 megabyte hard drive. But anyway, I digress. That's not crypto related. But anyway, so I really got into the mining hard and heavy right off the bat.
Okay.
And then filtered my way into trading from there. I mean, the trading was interesting because, I dabbled in the stock market and everything prior to crypto.
Oh, you did?
Yeah, I did. But the mining was really the big draw for me. And then it was just, the necessity of the only way to maximize your profit further from mining is to at least become a semi-competent trader.
Okay. Yeah, because you're watching for the perfect time to sell.
Exactly. Instead of just dumping straight on the market as soon as you mine, you're definitely not going to make the maximum amount of profit that you would be able to make doing that.
And is that where you started to think about spec mining?
Well, spec mining kind of really just developed. I'm not going to say there was any one singular person who came up with the concept or anything like that, but a lot of us who just stayed into crypto, because obviously, like I said, during the 2014-2015 bear market, a lot of people left. It felt like it was the end of crypto for real. So like there was very, very few people still active in the community. And those of us that were left, most of us were miners. And so it was just kind of something that just morphed into its own being, evolved over time. Like I said, I'm not taking credit for creating it because I definitely was not the sole person doing that, but it was just a loose group of basically minor traders who were left. And it just kind of grew from there. It was just basically finding the most profitable ways for mining, because especially in 2014 and 15, mining was highly unprofitable. So you really had to look for any kind of edge or anything you could do to maximize your profits.
Okay. But were you still thinking long term at the same time? Like, were you still thinking, which coins are maybe going to be more valuable a year and a half down the road? Or was it all, short to midterm? I could turn this in a week. I could turn this in 2 or 3 weeks and trying to eke some profit out of it.
Oh yeah, there was definitely long-term bags, Bitcoin being chief among them, obviously, because, that's the big daddy of them all. So obviously that's the one you want to hold long-term. But there was longer-term plays as well.
Okay.
Not all of which panned out, obviously. I mean, look how many coins have died from the 2014-15 era that no longer exist.
Sure. Yeah, and I feel like that's going to happen, from right now to 2 or 3 years from now, or maybe shorter,
it's
depending
already
on how long it takes for the next bull.
Oh yeah, it's already starting, as you see with what's coming out of what was that coin that just the other day, Bulwark, I think.
Okay.
All the developers are stepping down from that coin because basically their developer fund or whatever it isn't enough to pay for 7 full-time devs, so they're all quitting.
Great.
Yeah, you're gonna see a lot. You're going to see a lot more of that kind of stuff happening. It looks like NEM's on the verge of that as well. So
I was just going to bring them up. Yeah.
Yeah, you're going to start seeing an acceleration of die-offs of weak coins.
Nem is what, on the verge of bankruptcy? I mean, they're
Yeah.
maybe about to like recover from it, but I don't know. At least the reports from yesterday weren't looking that they're looking a little ominous.
This is why all the long-term guys have been very or the older guys, I mean, in crypto have been very hesitant to call a bottom. Because we saw the bloodshed and devastation of the 2014-15 bear market, and there just hasn't been as much of that. There hasn't been this mass die-off of scams and underfunded, half-baked ideas.
Okay.
So that's basically what a lot of people have been waiting for, and it looks like we're starting to snowball on that.
Okay. All right. Well, I guess, good luck out there, everybody.
Yeah.
Hopefully it's not as bad as it was, but at the same time, I mean, for as many ridiculous ICOs as there were, toward the end of 2017, I don't know, maybe it's for the best. Maybe it's, pruning the leaves off a plant so that it can grow a little bit, a little bit faster down the road.
Oh yeah.
So can you just tell us a little bit about what your setup looks like when you're mining? I mean, like how many, like, are you more CPU, GPU? Do you fuck around with ASICs? Not so much. What does that look like?
Fuck ASICs in the ass, dude. No. I am hardcore CPU, GPU.
I'm sorry, I haven't asked.
Yeah. And God willing here, shortly be getting my hands on some FPGAs as well.
Okay. And do you want to talk a little bit about what you're mining right now, or would you rather keep that quiet?
Yeah, I kind of
totally understand if you do. I mean, yeah, I get it.
This is how I pay bills, so it'd be a real dumb idea to screw my edge.
Yeah, I hear you. Well, how about this? All right. So I'm just curious what you look for in a project. I mean, like what kind of fundamentals do you want to see when you're considering a new coin, when you have some, some spare processing power that you want to, cash in on?
I like basically ASIC resistant coins, ones with reasonable total supplies and emission rates. Also, mining difficulty is a good thing to look at. As far as this also, I guess, kind of counts as the emission rate. But how difficult is it going to be, to maintain a level of profitability? And there's multiple factors you look for, and I tend to, just my personal preference, because I'm a little bit more of a risk taker when it comes to spec mining. I also tend to really like the custom algorithm coins that come out with brand new algorithms. Those are normally good spec mining plays traditionally. But like I said, there's also a high failure rate as well.
Yeah, that I mean, that makes sense to me. Just as a speculator, as somebody like, watching ICOs last year, or just, I don't know, you want to get in early before the interest peaks and the price peaks. But at the same time, like, with that risk, there comes that danger of, shit crashing to zero, because, any number of things can happen because everybody ditched the project, or, I don't know what that, I guess, that's disaster dumpster fire would be in mining. But sorry, go ahead.
Yeah, I was going to say, that's where you start getting into risk management. You never just hold all the coins that you're mining or whatever. I mean, if you're sitting at a good profit margin, and obviously that's what a good profit margin is entirely subjective, because everybody's going to have a different reference point, a different perspective. They're going to have different electrical costs, that kind of stuff. So what's a good profit margin is entirely up to you and your personal circumstances. But it's normally a good idea to, not just hoard whatever you're mining and just hanging on to it, because a lot of stuff does peak early and then crash to zero. So why miss out on or take that opportunity cost when you could just sell at least a portion of it, maybe hold back 10-20% of what you mine in case it does skyrocket later. But you don't want to just mine stuff and just sit on it forever, because you're going to end up wasting a lot of time and money mining and holding coins that end up dying and you never sell.
Yeah, no, that makes a lot of sense. Does your strategy change when you're looking at a bear market versus a bull? Like, do you lean more, toward mining, or do you back off from that and trade a little bit more? Do you trade differently? Would you mine different coins maybe?
Oh yeah, it definitely. Well, my strategy is always fluid and in flux.
Okay.
You got to stay adaptable to all the different conditions that occur.
Sure.
But it does obviously focus more heavily on mining in the bear market, and because that's just a more guaranteed profitability income stream, I guess you could say.
Okay.
Because you're not basically trying to fight a trend and squeeze profits out. Now, I guess, yeah, everybody can say you can still make profits when it goes down. You can short. Yeah, whatever. I personally hate shorting because I always get insta liquidated every time I short.
Oh no.
Yeah. So I hate shorting because it just never works out for me.
I've never tried it. Honestly, just the like, as fast as I've seen sentiment, I guess, or pump and dumps like change the dynamics on an order book, I just don't trust, any trend really, or at least like in the short term.
Yeah. And so it's just, at least for me, and because also my main area of expertise, I guess you could say, for lack of a better word, it is mainly mining focused. So I definitely put that to work to my advantage during a bear market.
Makes sense. No, that makes a lot of sense. Let's see. Now, I know you're a huge proof of work proponent. How do you feel about proof of stake? Are you anti proof of stake? Do you mostly stick to proof of work coins? Like, what exactly is your thinking there?
I think proof of stake as a extra security measure in the via POW POS hybrids. I like it, but as a sole mechanism, no. That's a terrible governance model by itself, for the simple fact that it basically creates a plutocracy, because you got the person who either manages to, if it launches as a POW and then transitions to pure POS, you got somebody who's gonna basically mine rape it and mine the vast majority of coins, and then they will control the network effectively after the POS swap. Or if it's sold off in chunks, and from launch, and then purely POS after that, whoever's got the deepest pockets is going to buy the biggest chunk of coins. And so yeah, as a sole governance model, I'm not down with it. And now there's something about this fake stake vulnerability I've been hearing grumblings about. Apparently it's a pretty bad POS vulnerability. I have not dug into it or researched it myself yet, so okay. I'm not going to really comment on the vulnerability, just that I've been hearing of a new POS vulnerability that is apparently a pretty major vulnerability.
Interesting. And is that like, our fingers being pointed at any like project in particular, or is that just, a criticism of just the architecture, as people right now?
From what I've heard, like I said, again, I have not dug into it in depth. It's just passing tweets and stuff like that I've seen. Uh-huh. So from what I understand, it's a vulnerability in the basic architecture of POS itself, and not any coin specific vulnerability. Okay. So like I said, if it is as bad as I've been hearing about, then yeah, that's a pretty not good thing for strictly POS governance models.
Yeah. Oh yeah, you love to see that.
Yeah. And like I said, as an extra layer on top of POW, hell yes, I'm all for it, because that's another layer of security. But as the sole, consensus mechanism, yeah, that's not good.
Okay. All right. Well, you know what? This is actually a really good transition to switching off from some of the questions I was asking you to opening up the floor. Because our first question is coming from Snores, and he's actually asking specifically about Zilliqa. He or she, they is asking about Zilliqa, and they want to know if Zilliqa is, they're a mix of proof of work and if I'm correct here, Byzantine fault tolerant. I think Byzantine fault tolerant. I forget if it's practical, but it's not delegated. But either way, they have two different governance mechanisms. Proof of work being for mining, and then Byzantine fault for reaching consensus. So Zilliqa launched today, and Snores is wondering, A, if you're going to mine, and then B, just what your thoughts are on the mechanism of, half proof of work and then half, consensus reaching in another, mechanism in another way. Like, what did you think about that?
Well, as for Zilliqa specifically, I have not looked into it, so I cannot comment on it. However, in the more ambiguous POW plus other consensus mechanisms, like I just got done saying in respect to the POW POS hybrids, I'm all for extra layers of security and consensus. So as long as it works, that's the big caveat, which obviously requires lots of testing and stuff. And, that's half of what we're doing here in crypto, is figuring out what the hell works and what doesn't. So, yeah, if there's a more robust form of consensus, then I'm all that is, viable and secure, I'm all for it.
Yeah, it's really kind of like survival of the fittest, isn't it? Whatever sticks around longest, if it hasn't broken yet, I guess we'll keep using until we find, a better algorithm or a better, mining scheme or fill in the blank, I guess, right?
Yeah.
All right. Well, yeah, I mean, it'll be definitely pretty interesting to watch, how Zilliqa pulls it off, if they do, if they don't, but, interesting launch to see today. So, all right, let's move on. Vindian8 is asking, so hello, SoCal, former miner here. I always like the versatility of using a GPU, and I want to know your thoughts on the most cost-effective and efficient mining setup right now. ASIC or GPU or FPGA, or are there any other alternatives springing up that I should be paying attention to?
FPGAs are really starting to gain traction. They're really starting to get more independent developers that are creating bit streams, which has always been the big hamstring or Achilles heel, if you will, in FPGAs, was that there's no the bit streams that they use, which is basically the mining program, I guess you could say.
Okay.
They have to be custom made for each different algorithm. And there's been, since it's a very specific and expensive piece of equipment, there's never been a whole large community devoted to it as compared to GPU and CPU mining, where there's loads of independent developers always, coming up with new mining programs and improving on old ones and expanding them and adding support for the new algorithms that come out and all that kind of stuff. Whereas there's very few that do that for FPGAs. So, but like I said, they're starting to gain more traction. So I would definitely have eyes on FPGAs, but as of right now, I'm definitely all about GPUs, CPUs, specifically for the versatility. However, like going back to FPGAs though, that's why I love them and can't wait to get my hands on one, is you basically get the speeds and efficiency of an ASIC, but you get the flexibility of a GPU.
Word. So
So
what makes you say that FPGAs are catching on more?
There's definitely been a lot more chatter about them. There's more people getting interested. There's more developers starting to develop the mining bit streams for FPGAs. There's also some FPGA. I don't know if I think they're just a reseller, but there's also some vendors that are, becoming mining oriented for FPGA sales. So it's just starting to, just gain more traction as GPUs are just not able to keep up with network demands.
Okay. It would be fascinating to see if some kind of FPGA based, Bitmain competitor could kind of come up and lock arms with them a little bit. Do you see something like that happening, or are FPGAs maybe a little bit too specialist right now?
Yeah, the FPGAs are a little too specialist still. And also, if any FPGA, I think the only real producer of FPGAs at this point is Xilinx, but I'm pretty sure that they would prefer to challenge Bitmain instead of work with them.
Oh, yeah. Okay. I mean, that's honestly, that's what I meant. Like lock horns, I guess, not lock arms. Cause I mean,
Okay.
We need somebody duking it out with them personally.
Yeah, that's
like
two
in my opinion.
separate things there, big dog.
No, absolutely. Yeah. I don't know. I mean, nothing against them, but at the same time, like we need some competition because they're they definitely pull their weight, maybe a little too much in one man's opinion. All right. Next up, Bitcoin Maximalist is asking, what would be your biggest recommendations for a newbie who wants to get into mining?
That is a question I get a lot, and unfortunately, there's no good answer because nobody's ever really taken the time and effort to, put all these resources together in one place. And a lot of these resources I mentioned is just experience, which makes it really hard. So really all I would say is, find a POW coin that you want to mine. And I can tell you, every single POW coin will have either a post on the Bitcoin Talk forums, or they will have their own forums with or even embedded in their GitHub or GitLab, whatever, documentation, where they will have step-by-step guides on how to mine the coin. So basically, that's really the best way to learn. Just find a POW coin you're interested in, and then go look for the guide. Google's your friend when it comes to mining. So, how to mine whatever coin, insert coin name here. And that's a real easy way to find a lot of step-by-step guides. And like I said, every coin does that because they want people to mine the coin. They're not just gonna, not tell people how to mine it. They're not just gonna put up their code and be like, all right, here you go, have fun. There's going to be some sort of documentation that says, okay, this is how you set up the wallet, this is how you set up the miner, and this is how you start mining. All right, there you go.
Sure. All right. So this isn't part of Bitcoin Maximalist question, but just sort of as a follow-up, in your experience, if you're mining a proof of work coin and if you're CPU, GPU, what would you say, like, if you're just getting started, is sort of your runway? Like when on average would you say you'll probably break even after putting all the money into building out your basic starter rig?
Oh, yeah. See, again, that goes back to what I discussed earlier when I said profit margins for everybody's subjective. Same thing. Break evens for everybody is entirely subjective. You might never ROI on some setups. you might, which is really more a function of you quitting before you do ROI because it's running so inefficient. But it's yeah, that's a hard question to answer because there's no solid answer to that question because it totally depends on how much you put into the rig. You know, if you're able to get some stuff off of crate because, you know, from crazy discounts or something, or if you actually had to pay a huge markup on some parts, what your electrical costs are. And, you know, if you manage to get in early on a coin that then shoots up and mine a bunch of coins on a coin and it shoots up in price and you're able to sell it for an insane profit, that there's so many different variables that there's no good way to give an answer to that. It's all just dependent. You just have to figure that out. You know, when you budget out your rig, you got to figure, okay, this is what I want to mine, you know, and preferably you want to benchmark off of something that has a long and relative to crypto stable price history. So, you know, something like Bitcoin or Ethereum, you know, so something like that, to be like, okay, so, you know, roughly it should take me this long if I just mined that to ROI my rig.
Yeah.
And that gives you a rough guesstimate, but there's no way to pinpoint. Like I said, it's going to be different for everybody.
Okay. And just a quick follow up on part of what you just said, you know, it speaks to your point about mining during a bear market, right? Because if you're buying some secondhand gear that somebody's selling after all these prices drop and, like, you know, the demand isn't there, those prices are going to be a lot lower.
Yup.
So maybe, you know, Bitcoin maximalist, maybe now's the time.
Yeah, now would be a good time to start looking at cheap gear. However, always be wary when you buy secondhand gear because you don't know how hard that stuff was run. You don't even know if it actually works until you get your hands on it. You know, you don't know if it's going to continue to run. There's a lot more negative variables in it, so, you know, always be aware. And that's why you always want to go for bottom barrel prices on secondhand stuff, because why would I pay close to MSRP for something that I'm not guaranteed is going to work as long as a brand new one, you know?
Yeah. Yeah. That makes a lot of sense.
So if somebody's trying to sell it for just like $100 under MSRP or $50 under MSRP, I'm just going to go buy a brand new one instead. However, if somebody's selling, you know, GPUs at a quarter of MSRP, well, then I might gamble and buy a couple.
Right. No, totally. All right. Let's see what else we got. So Bitmonk is asking if you have any thoughts on Grin and how this token will do against privacy-centered coins.
Grin. I think they're
in the news lately.
Yeah. That emission rate thing is really gonna hurt at first in the short to midterm. And I haven't really dug into their privacy tech too much. I know it's based off of Mimblewimble, right, and Dandelion and all that, but like what specific to Grin that they're doing, I have not dug into yet. So I don't really feel qualified to comment on them yet. However, like I said, I do think that their launch was not great. For
price-wise,
well, not the launch itself. Like from what I heard, there was no issues or anything. But what I mean is their coin metrics could definitely have been done up better before they launched. You know, touching back on the emission rate and all that kind of stuff.
Yeah, I mean, the economics matter.
Exactly. And also, liquidity matters. A lot of people don't understand market caps and liquidity. They just don't get it. And yeah, what the market cap is now, you know, the circulating supply versus the total supply, and how the emission rate plays in what role the emission rate plays in that. There's a lot of metrics that lots of people just don't understand. And quite honestly, that's why they get screwed a lot of times, is because they don't know what they're doing.
Yeah. Yeah. I know what you mean. Yeah, and I mean, all right. So I don't know if you're aware of Masari and like, I mean, their report made a lot of waves. What, like a week, 2 weeks ago, when they went to town on Ripple, right? And they were getting in the weeds. I mean, they weren't even just talking about the market cap versus the reported market cap. They were talking about, and I glanced at it, but I didn't read the full thing. It was the lockup periods that some of the founders and then some of the other people who've worked on the team are involved in, how long their coins are locked up, how much XRP is locked versus what's been reported and what's been understood. I don't know if you were familiar with that at all.
Oh yeah, I love it because I am a very, very huge criticizer. I am not a fan of Cripple, and I have made it well known that I do not like Cripple, and it's a fucking scam. In fact, this is great you asked me about that because I was just about to use an example of people who don't understand simple things like market caps and how that works, because all these crippled idiots that are saying oh, it's the next one world money and it's going to overtake Bitcoin and it's going to be worth $589. It's like, do you understand that they have an unlimited supply? Like, that would never happen. It would never happen. There's not enough. There's literally somebody worked the math on it. I wish I had their handle to reference the tweet, but somebody actually worked the math on it, and it is physically impossible for Ripple to ever get to $500 because it would require more money than exists in the entire world, and not just physical money, all money that's counted, including the vast amounts of digital assets and everything that are only exist on paper but not as actual money. You know what I'm talking about?
Yeah.
So it would require,
plus shekels and seashells and whatever else.
Exactly. It would require more money than exists in the world to get the market cap of Ripple up high enough to where Ripple was worth $500 a piece. It is physically freaking impossible. Oh God, cripple idiots are dumbasses, man. And so yeah, that's a hard stance I'm taking.
You're drawing the line. Yeah. So, listen, SoCal, if you could send me that link, we'll make sure to post it.
This was a while ago. This was about a month or two ago, at least, that I saw it. And honestly,
God, ancient history.
I'm the worst when it comes to referencing stuff, because I'll see it and file it away in my memory, but I won't save it in a screenshot or something because I'm a dumbass. You'd think I'd learn my lesson, but I don't.
I mean, there's just so much shit floating around too. Like, I don't know how to keep track of it. I bookmark on Twitter, but even then it's just like, it's just an endless fucking list.
Well, how about this? If anybody who is listening to this is a math major or mathematician or anything like that, if you could run the numbers, run the math for us on how much money it would actually take to get Ripple up to $500 a freaking coin, I'd appreciate it.
All right, the challenge is out. Let's see what y'all got. SoCal, we'll get back to you when we run the numbers, okay?
Yep, you know where to find me.
Let's try and get one or two more questions in here before we sign off. I know Yicky is asking if you saw Decentralized Exchange. Oh, sorry. So how do you see Decentralized Exchange? Decentralized is capitalized. I don't think I've heard of that exchange, so I'm guessing just decentralized exchanges in general. 5 years from now, or maybe it's one particular exchange. But can they compete against centralized exchanges?
Unfortunately, at least for the foreseeable future, decentralized exchanges have an uphill battle, and the biggest portion of that is going to be the technical competence required to utilize one of those exchanges. Mm-hmm. It's never going to be able to be, as at least right now, as user friendly and as easy as a centralized exchange is. Then you also have the years of indoctrination that you're going to have to overcome, where people are like, oh, if it's not regulated and insured by the government, then it's criminal or it's a scam, which a lot of people are going to be thinking. So that's why a lot of people go to services like Coinbase and Robinhood and stuff like that. While those guys are definitely do not have the best interests of crypto in their hearts at all, you know, and also open up yourself to certain vulnerabilities, like, you know, all of a sudden now when you got these exchanges that are regulated and reporting to governments, now the government knows everything you're doing with your crypto, where it's going, where it is, where your accounts are, which is half of what crypto stands for, is, you know, to have your own sovereign money, you not having the government control your finances.
Right.
Which in essence is what a centralized exchange becomes, a government choke point.
Mm-hmm. Now, so that's an interesting part of, you know, the whole centralized, decentralized exchange bit too, that debate. Because like, I would imagine the majority of people that, at least for right now, are still involved in crypto, you know, with prices where they are, you know, basically anybody who is interested past like John Oliver recording a video about it, right?
Yeah.
They, I think, would be the first people to use a decentralized exchange. The only problem is, are there, you know, really any exchanges that can scale, you know, and have enough users with enough liquidity that is easy enough to use, that somebody who can figure out a public private wallet configuration and deal with that by itself can still use it? Because like, I mean, even for somebody who's crossed a couple of hurdles in crypto and gotten involved and gotten their feet wet and maybe lost some money, there's still a lot to learn when it comes to these things.
Oh yeah, there is. And as a starting place, you know, to play with and dabble in and learn, yeah, centralized regulated exchanges are not terrible. You know, they're great start. I, you know, used Coinbase and everything, you know, starting out and everything like that. So it's definitely not bad to start out. However, putting all of your, you know, crypto assets in the hands of one centralized exchange is not only terrible OPSEC, but it also is extremely risky, because what happens if your government all of a sudden decides you don't get your crypto anymore, you don't get those assets anymore, or if the exchange is hacked or compromised, you, all your assets are gone. So it's really more of a security issue other than anything else, you know, rather than, you know, oh, the government's spying on me or anything like that. It's more of a, yeah, your money could be gone at any moment for a multitude of reasons, and there's nothing that you would be able to do about it. So it makes more sense to securely store your own assets.
I mean, look, it ties back to risk management, right?
Exactly.
Yeah. All right. Last one. And I hate to pull the trigger because this is an awesome talk, man. It's really good to have you on. I guess we can't call it a podcast, the live stream, the AMA session. I mean, yeah, we're gonna try and push this out in a lot of different ways, long term. And speaking of Grin, I don't know if we can actually comment yet because we don't have a firm date, but we are in talks with them and a ton of other teams to get some other, you know, dates set up for y'all in Cryptocopia. But yeah, this is gonna be a fun year. We're gonna have a lot of really good conversations with some really ingrained teams in the space. But SoCal, we're well, Vindine 8 is wondering, it's a pretty broad question, but how do you see the crypto market playing out through the rest of 2019? If you could take your fortune ball, you know, your fortune teller's hat out.
As of right now, and everything obviously is, well, first off, going to disclaim not financial advice. I am not a financial advisor, planner, nothing like that. So I'm going to disclose that right off the bat.
Sure.
But my personal opinion is that, you know, obviously everything's always in flux and the circumstances are always changing. So this is obviously subject to change, but I'm hoping for a reversal mid to late this year. I would think that would seem good for recovery. I've heard some estimates as early as this spring for a recovery to begin, but play it a little bit safer and still prepare for a little while of the bear market. I'm not going to get my hopes up yet. So I would say probably closer to the end of the year before we start seeing a turnaround. And I don't think it's going to be like a 2017, because what a lot of people are glossing over is that 2016 was actually like the beginning of the bull market. However, it was a very slow tick up the entire year of 2016. And then it was 2017 when everything went apeshit and a whole bunch of money rushed in and blah, blah, blah.
Right.
But, so I think we're going to see a repeat of that, of the slow grind up, before we see, crazy parabolic movements. And we might not even see as crazy of movements as we have before, as everything's become more diffuse. There's more money in the whole economy now and stuff, and which therefore, requires even more money to make a very large movement. So I don't think we're going to see as crazy of a parabolic run as we have before, but I definitely think it's going to start out with a slow grind up that might take a year or two before we start, getting close to the 20,000 level again.
Okay. I mean, yeah, like expect the worst, but hope for the best, right?
Yeah, exactly. So, yeah, like I said, I don't think recovery is going to start until closer towards the end of the year. And then even after it does start, it's not going to be okay, we're back up to 10,000 in 1 week. No, it'll take months and months of slow grinding up.
Yeah, that makes sense. No, I hear you, man. Well, listen, thank you so much, SoCal. Listen, it's been great having you on. Cryptocopia thanks you. Listen, y'all, we're going to have plenty more AMAs just like this, one next week unannounced, but we're doing weekly sessions. So stay tuned. SoCal Crypto, you can find him on Twitter. It's SoCal_crypto. Is that right?
Yes. At SoCal_crypto. Yeah.
Okay. All right. Great. Well, yeah, definitely check him out. Dropping knowledge left and right. Thank you again for joining us. That's about it, but we'll see y'all next week. And SoCal, have a great night, man. Take it easy.
You too, guys. Thanks for having me on.